LYFT IPO and what's about to happen to San Francisco. What up, internet world? It's your boy Jermaine back with another video. This video is this one's a little bit different because right now I'm out backpacking, traveling. I'm so far away from San Francisco. I'm literally about 10,000 miles away from San Francisco right now. And what am I doing? I'm sitting down making a video talking about San Francisco, the Bay Area, and some of these companies that are going public, okay? So everyone is aware that LYFT, rideshare company LYFT, has finally went public under the ticker symbol LYFT. Pretty cool. I wonder will Uber do the same thing when Uber goes public, since it's a 4-letter word and since ticker symbols are usually less than 4 letters. Maybe Uber will do the same thing. But anyway, we're talking about LYFT right now. So LYFT went public last Friday. I don't know what day that was in the US, but yeah, it went public Friday in the US, right? And when LYFT went public, very, very interesting, it opened at $87.24, which is kind of high, you know. I heard rumors it was going to open around $72 a share, but no. If someone like me, a retail investor, if I want to purchase shares in LYFT at the first available opportunity, it would have cost me $87.24 per share. But the interesting thing that happened with LYFT is when the shares went on sale, the price started to fall. At the end of the day, LYFT shares closed at less than $78 per share. So it opened at 87 and closed at 78. So if you invested in LYFT the first day that it opened, you would have paid a price of $87.24. This would have been the price if you would invest in LYFT the moment that the shares were available to the public. And there was a lot of speculation out there that, LYFT shares could have went to $100 the first day, or, LYFT shares could have dropped. So many people were hyped up. And I talked to a lot of rideshare drivers who invested in LYFT through the Robinhood app. And a lot of people lost money. A lot of people lost a lot of money because LYFT was down $10+. And I'm pretty sure a lot of people got burned. So let's just talk about LYFT. Let's talk about why I won't be investing in LYFT anytime soon. And also I want to talk about what's going on and what's about to happen in the Bay Area, because I don't think a lot of people are aware, but LYFT is the first company that has went public in San Francisco, and it's like the first company of a lot of companies that's about to go public this year. So first off, let's talk about LYFT. LYFT. If you know me, if you've been following me online, if you know me on YouTube, you know I'm not a fan of LYFT. And the reason why I'm not a fan of LYFT is because when LYFT first started off, LYFT was just very stubborn. When LYFT first started off, you had to have a Facebook account to use LYFT. So LYFT was already sectioning itself off. It was already saying, okay, we only want to deal with people with Facebook accounts. We only want to deal with people like this. When LYFT first started off, they used this thing called the pink mustache. I thought this was a really, really, really good marketing scheme. That's how it got so freaking popular, because people would be walking down the street and you would see someone driving with a car with a pink thing on the front, and you'd be like, what is that? What's up with that? And I remember with this pink mustache, you were supposed to have it on the hood of your car, but of course you would have some people that just throw it on the dashboard. These are the old school LYFT days. I wonder where is my old LYFT pink mustache. I just wonder where it is. I wonder, do I still have it? Did I sell it? I think I sold it to someone or something. I should probably look for it. Maybe I still have it. That would be a really awesome souvenir to have, later on down the line. Yo, I got this LYFT mustache when LYFT was a private company, 5 years ago. Okay, but anyway, so LYFT. So back in the day, LYFT was you need a Facebook account. But Uber, on the other hand, Uber was opening up to everyone. Also, at the same time, years ago, Uber was opening up to different markets. Now, I'm not trying to make this video Uber versus LYFT, but I'm going to get to Uber in a second, because Uber is going to go public in about a month. And there is so much talk with the Uber evaluation versus the LYFT evaluation. Uber is a much bigger company than LYFT. LYFT is sort of behind on a lot of other things that Uber is just already miles ahead. Uber is in so many more countries versus Lyft. Lyft is only in Canada as of the making of this video. I've taken Uber in more than 10 countries, and Uber is in way more than 10 countries. It's just the only 10 countries I've taken Uber in. I really, really like Uber around the world. Uber here, Uber there, Uber everywhere, okay? Uber has a much larger business model. Uber just recently bought Lime Bikes, okay? Now, Lyft just partnered with a company. I think Lyft owns about 80% of the stake in the same company that has the City Bikes in New York, also the Metro Bikes in LA, and also the Ford Go Bikes in San Francisco. So Lyft owns a large chunk of the business that owns those bikes, and they own those bikes. And Lyft also owns a portion of different bike services in other parts of the US, not just the 3 cities that I named. Uber has Uber Eats. Uber Eats is a large business for Uber. Uber makes profits off of Uber Eats. Uber also has Uber Freight. A lot of people may not have heard of Uber Freight, but it's for truckers. And yeah, you can make money if you got a truck and you can deliver like freight with Uber. Uber also is working on their driverless car division. Now, Uber driverless car division is one of the biggest things that Uber is working on. If you guys don't know, Uber and Lyft, they're both in the same boat. They spend so much money on drivers. Drivers cost both of these companies so much money. And this is one reason why Lyft is not reporting a profit, and this is one reason why Uber's not going to report a profit either. Both of these companies, they need to develop driverless cars in the future so they can make money in the future. But as long as they have human drivers, they're not going to make a profit, because you have to pay drivers so much money. You have to pay drivers bonuses. You have to pay drivers incentives. You have to Lyft and Uber has to compete to keep drivers from going to one to the others. This is why Uber always has, weekly driver bonuses to keep you driving only on the Uber platform, so you won't go over to Lyft. And Lyft does the same exact thing. These incentives are very, very, very expensive for rideshare companies, but they have to pay these incentives to keep drivers on their platform, to keep customers using their platform. So they kind of have to do it. Scooters. Uber and Lyft have both invested in scooters, and scooters are just a last mile vehicle. Last mile vehicles are great. Scooters can be an excellent form of last mile transportation. For example, let's say you have to walk 10 minutes to a bus stop and there's a scooter right outside. You can use your phone, scan, rent a scooter, ride the scooter to the bus stop, drop the scooter off at the bus stop, get on the bus, get off the bus, you're at work, or if you're not at work, jump on another scooter and ride 5-10 minutes to your office. So scooters can be a great option for a last mile vehicle. All of these last mile vehicles, like the scooters that Uber and Lyft is investing in, and the electric bikes, and also the non-electric bikes, these are really, really great last mile vehicles, and these are things to take cars off of the road. The less cars on the road, the safer the roads are. More people die on U.S. roads than all the wars that the U.S. has participated in combined. Like, it's insane the amount of people that die on roads and die in cars. But anyway, so what's going to happen to San Francisco? So right now, Lyft has just went public. So what exactly does that mean when a company goes public? What that means is that particular company raises a lot of money. A lot of people become rich when companies go public. Okay, GM invested millions and millions of dollars into Lyft, and the day that Lyft went public, GM paid a chunk of their money back. GM actually doubled their money. Google invested a ton of money into Lyft as well. And guess what? The same day that Lyft went public, Google made a chunk of money off of the money that they invested in Lyft as well. Who else is making a lot of money? Because these are just two big companies, and big companies are just big companies. Big companies always make a lot of money. But the employees that work at Lyft, so if you're an employee that work at Lyft, usually employees receive options, stock options. And if you have worked for Lyft for a very long time, if you work for Lyft for 5 years, you're probably going to receive way more stock options than someone who have worked for Lyft for the past year. For example, let's say someone has worked for Lyft for the past six years, okay? They may receive X amount of shares in the company. So the day that the company goes public, those shares are actually worth money. So you have some Lyft employees who probably became a millionaire on Friday, the moment that Lyft became a public company. Because the Lyft employees that receive the shares from Lyft, now the shares actually have value to them because they're for sale on the open market. And now these Lyft employees have the power to, if they wanted to, they could sell their shares and do things like buy a 1-bedroom apartment in San Francisco for $1 million. Okay, you could do things like sell their shares and buy real estate. Okay, and make San Francisco more expensive, or they could keep their shares, and who knows, 10 years down the road, the shares could be worth a whole lot more than what the shares are worth today. Now, some employees will cash out, some employees won't cash out. That's just usually how it works when companies go public. Some people stick around, some people take their money and run, some people stick around with the company, some people quit the company and retire, or just quit the company since they made a lot of money since the company went public, and they'll quit and go start another business or go do something completely different because they have made a lot of money off of the company going public. But this video is not only about Lyft. This video is about what's going to happen to San Francisco and how San Francisco is going to change. So this year, there are a handful of companies that plan to go public. Handful of Bay Area companies. There's Slack, there's Zoom, there's Postmates, there's Patreon, there's Pinterest, there's WeWork, which is actually not a Bay Area company, and there's also Airbnb, and let's not forget Uber. Wow. These are a lot of companies going public, and San Francisco is a very, very small place. So you mean to tell me all of these companies are going to go public? So Lyft had an valuation of around $20 billion. Uber's valuation, which is suspected to be one of the largest valuations around. Uber is supposed to be valued at $120 billion. Oh my gosh, there is going to be so much more money in the Bay Area. There is going to be so much more money in San Francisco in just a matter of time. Oh my gosh, so when Uber goes public, I'm pretty sure a lot of employees are going to react differently. Some employees are going to sell out and buy a condo in San Francisco or maybe Oakland. Some people will probably sell out and maybe move to like the middle of nowhere in the middle of the US and just live a different life. Some people will stick with the company and hope that Uber continues to grow and Uber someday makes a profit, because a lot of people think just because they request a ride on Uber is making money, Uber is making a profit, and that's just not the case. Like, Uber is burning so much money. They're just burning so much money because they have to invest in driverless cars. They have to pay out so many incentives to drivers. There's just so much money to be lost in this game right now. Like, the way these companies are going to make money is when driverless cars on the road. It's when robots are delivering Uber Eats, because you're not going to have to pay a driver. Robots cost way less to operate than a human. If a human gets hurt, gosh, there could be lawsuits behind that. If a robot gets hurt, there's not going to be any lawsuits. Robots, there's no workers' compensation. Robots, come on, robot, you get what I'm saying. Robots are just very, very different. So you have all these Bay Area companies going public, and a lot of these employees have worked for these companies a very, very long time. So a lot of these employees are literally about to get rich, like overnight. Like, a lot of these employees are about to become millionaires in San Francisco. A lot of these techies that we see in San Francisco, literally, their lives are about to change, because when their company goes public, and if they have worked for that company for X amount of time, they're going to receive a lot of shares, and those shares are going to be worth a lot of money. So this is, this is kind of the sum up video. I kind of want to talk about, the Lyft situation, because I see a lot of people have been talking about online, Lyft went public. Are you going to invest money in Lyft? I'm going to stay away from Lyft. I'm probably going to stay away from Uber. If Uber, I don't know, I probably will stay away from Uber just because I just don't know what to think. One company I will pay attention to is Airbnb. I think Airbnb could have some serious potential. Airbnb is definitely fighting a lot of problems, just like Uber and Lyft. It's fighting a lot of problems. But I feel that Airbnb is going to be way, way, way more profitable than Uber and Lyft. I feel that Uber and Lyft could be profitable, but no time soon. like no time soon. And just because a company is not profitable does not mean that the stock price will not continue to rise, because companies can be unprofitable for years and you can still make money investing in the stock. Amazon is the perfect example. Amazon, I mean, look at Amazon. They just started to make a profit like just recently, like a couple of years ago. And for years, Amazon has just been basically a company not generating massive amounts of income. But that's changing. I mean, look at Amazon now. Amazon is bigger than Walmart, basically. And look at Amazon. Like, you know, if you would have invested in Amazon 5 years ago, you would have bought Amazon shares much cheaper than what they are today. And now look at Amazon shares today. So I say all this to say that, you know, LYFT just went public and the shares just went on sale a couple days ago. The shares could do a lot of things. They could go up, they could go down. But my prediction is I believe that the shares are going to continue to go down, because I feel a lot of people are going to cash out, especially a lot of like your big investors, like maybe GM. I don't know, maybe GM has stipulations where they have to keep the money invested in, you know, in LYFT for X amount of years, or maybe they can pull out the money whenever they want. But when big companies like this pull out money, they don't just pull it out all at one time. They'll, you know, pull it out slowly over a course of weeks, over a course of months, so that way the stock price doesn't just do this. So that way you still have retail investors buying shares, and you have the big dogs selling off millions and millions and millions by the day. That's pretty much how the game works. But guys, I want to make a video talking about this LYFT IPO, and I also want to make a video talking about how San Francisco is going to change, because there's going to be so many more millionaires, new millionaires in San Francisco and in the Bay Area this year, because this year a lot of Bay Area companies are going public. Employees are going to have way more money. Investors are going to have more money, and prices are going to get more expensive in the Bay Area. I don't necessarily know about rents. I don't think that rents are going to get that much more expensive, but just home values are about to go up even higher. But anyway, like, comment, subscribe. Thanks a lot for watching. Peace out, y'all.